How do you choose the right investment instrument for you? Hey everyone, what's up? My name is Preston and today I'm excited to be your new guide to the world of investing. Now don't worry, I won't bore you with any complicated theories, jargons or any maths equations, right? I'm just gonna share simple tips and tricks so easy that you can follow it very easily. Now I know some of you might be thinking, I'm just another finance guy talking about finance stuff on YouTube. But trust me, I am not your typical Wall Street guy. I'm more of a Main Street guy who believes that investing should be readily accessible to everyone, not just the elite few. So if you're ready to grow your wealth, hit that like and subscribe button and join me on this investment journey. And who knows, maybe one day you'll be driving nice sports cars. Okay, maybe not, but we can all dream, right? So let's get right into it. So, how do you choose the right investment instrument for you? But first, you need to understand why is investing so important in today's age. Number one, inflation. Now currently we are living in a very high inflation rate environment today. You know, my Thai fund used to be $4 last time. Now it's like $5, right? The most basic goal of investment is actually to beat inflation so that our money isn't eaten away by it. Number two, financial freedom. Do you really want to be working 9 to 5 every day, living paycheck to paycheck every month? Well, I guess not. Investing can generate another source of income through capital appreciation, through options, premiums, and as well from dividends as well. So potentially, you can work your way from the investments up to a point where you don't even need to carry on with your daily job, and your passive income from your investments can actually sustain your living expenses. And number three is of course retirement. You know, you want to secure your adequate funds for your own retirement needs so that you can retire comfortably next time. To sum it up, investing is important as it allows you to grow your money much faster. But now the question is, what are the investment instruments that you should pursue? Now there are a lot of investment instruments in the market, but let's take a look at 3 investment instruments that we can do. First, stocks. Number 2, bonds. And number 3, exchange traded funds, or known as ETFs. So what are stocks? Funny story, you know, I thought that stocks were literally product stocked in a warehouse, you know. Okay, but seriously, to put it simply, stocks means owning a piece of the company, in turn making you a part owner of that company. And these stocks can actually be sold or bought in the stock exchange. The pros about stocks is that first, you can get capital appreciation. Generally, if the stock does well, the company does well, the stock price will generally increase and thus earning you that capital appreciation. The company can also pay you dividends if it does well and if it has spare cash to reward investors. So there are actually risks of owning stocks. If the company doesn't perform well, naturally the stock price will take a hit and thus you will lose money. That's why it's important for us to know the fundamentals of the company so that you know it's a good company to invest in and it has the ability to weather tough market conditions so that you don't lose money. 2, bonds. Now think of bonds like debt obligations, like an IOU like that. To put it simply, you are lending someone money for a certain period of time, and in return you make money by the person actually paying you back the interest as well as returning to you the principal during the loan deadline. Now, bonds can be issued by countries and by companies as well. For example, in Singapore, you can invest in Singapore government bond securities as well as Singapore savings bonds, which are issued by the Singapore government. So the pros of bonds is that firstly, it gives you a safe and steady stream of income through interest or coupon payments. And it's also less risky compared to stocks, which are more volatile in nature. And it's also suitable for people who are looking for lesser risk investments. And there are also some cons for bonds. Now, bonds generally have lower returns compared to stocks. And of course, if the person that issues the bond, the company or the country, defaults on the bond, you will lose your entire capital. So if you want to know more about Singapore bonds, there's a link in the description below. Number 3, ETFs. Now, ETF stands for Exchange Traded Funds. It's a basket of stocks that can be traded on the stock exchange. Probably the most well-known ETF is the Vanguard 500 Index Fund, which is also known as VOO. So VOO invests in stocks in the S&P 500 index, which tracks the largest 500 companies in the US. So just to give an illustration, Apple is currently 177, Microsoft 331, and Amazon is now 121. So which in total cost is actually $629 for these 3 stocks alone. However, if you just buy one VOO share, which is about $385, you are actually investing in these 3 top companies, plus another 497 large companies in the US. The pros for ETFs is that firstly, it allows you to diversify your portfolio without having to actually individually to pick stocks. Now, ETFs that track the S&P 500 index generally have one direction in the long run. That direction is up. So in the long run, the price of VOO ETF always goes up. For simple or average investors who may lack the time to analyze stocks, ETFs is actually a very sensible method for those people, providing diversification as well as capital appreciation in the long run. Now for the cons of ETF, personally, to be honest, I don't see much cons in investing in ETFs, except that it is actually a long-term investment. It takes a long time for you to grow your investments through ETF. So if let's say you're looking for fast returns in the market, then ETFs might not be a suitable investment for you. And when the market went down a year after COVID, it negatively affected my investments. So remember to spread your investments across various instruments and enjoy the ride. There you have it, folks, a guide on how to choose the right investment instruments for beginners. Remember, investing can be a little bit intimidating at first, but with the right attitude, you can make the right choices and grow your money over time.